we're set to go.
Welcome to the Capital Discussions Roundtable. I'm Tom Nenemaker with Jim Riggio and our guest Bob Lang from Explosive Options. Before we get started, a quick disclaimer: the Capital Discussions is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. If you don't know your situation and have no way of knowing what level of risk is appropriate for you, we're not making any specific trade recommendations. The risk of loss in trading options can be substantial, so please be aware of all of your risks prior to placing any trades. Hypothetical computer-simulated trades are believed to be accurately represented. However, actual profit or loss may vary due to market factors such as liquidity, slippage, and commissions. And this is for educational purposes only. So with that, I'll stop sharing and switch the presenter role over to you, Bob. And welcome. It's the first time you've been with us, so it's nice to have you here.
Thank you, Tom. Thank you, Jim. Appreciate everybody spending a little bit of time with me this afternoon. And we're at the end of August now, and I did hear somebody tell me at the end of July, and I did hear a little bit about this on the on CNBC, or some analyst came out and said, we're getting ready for a very scary month of August. So since I can't see any of you guys, raise your hand if you can, if you believe that August was a scary month.
In my post to Bob yesterday,
yes,
I said if boring was an Olympic sport, watching paint dry would have won the silver medal compared to this market, which would have won the gold.
Well, you know what, Jim, I would actually disagree with you on that. Forgive me, because while if you were just playing the market indices and with low volatility the way it is, around 14%, sure, the ranges of the markets were pretty narrow, but if you looked underneath the hood, there was lots of really good stuff going on. I mean, last week we nailed a winner with Medivation, which was a buyout last Monday. We had another couple of really good ones in the hopper at the earlier in the month. So I guess
fair enough. I'm an index trader. I think
yes.
A big chunk of at least the folks that end up talking to me on a regular basis. And it can be scary, okay, even if you're an index trader, because when you start at a VIX of 12 or so, those are the ones where you can get really, really hurt if you are a premium seller. But there's always movement underneath. You just need to end up knowing how to end up finding it, and that's what we hope to end up listening to you for.
Right, and I think too, man, where I've had my greatest success in markets is to be is in an environment that is fruitful and strong for a stock picker. I'm a stock picker. I'm not I play options obviously, but I like a stock picker's market. I like a market that gives me an opportunity to make money based on my chart reading ability or my technical analysis, or even if I was a fundamental analyst. I want to be able to pick. I think I probably put about 20% of the value of fundamentals into my analysis, and about 80% of it of charts and technicals. But I just don't want to be whipsawed, like I'm sure a lot of you guys out there don't want to be, going to be taken to the woodshed because the North Koreans are tossing a missile over at the South Koreans, and it lands in the water, and the futures open up down 20, and you're not prepared for that, right? I mean, I'm just regurgitating something that happened from earlier this year. Does everybody remember that back in January? I mean,
oh yeah,
I mean, and that was small, right, compared to Brexit. Brexit was another one that whipsawed us.
You almost feel helpless, right? I mean, how do you unless you're, there's a lot of people, guys, who try and relate options trading and even futures trading, some of the things that you guys do, to akin to gambling, right? And I'd like, listen, I mean, any time that you don't have any certainty, there's risk involved, right? So we don't know. I mean, if you go to Vegas or whatever, and you play on the roulette wheel, you don't know where that ball's going to land. You don't know. You play blackjack, you don't know if you're going to beat the dealer or not. Just like when you play the futures market, you don't know for sure where the futures are going to end up. You put the probabilities, stack them up as much as you possibly can in your favor, and you take your risk and you're hopefully the outcome is good, but you accept whatever the outcome is going to be, right? So I think for a gambler, somebody who just doesn't understand risk, they just take their time out and enjoy themselves. I'd like to think that what you and I do is far better than gambling. You know, people I talk to, they say, "Oh, options trading, that's just gambling." I said, "No, actually, no, it's not. It can be done in a very surgical and strategic way for people to make money consistently on a regular basis."
It's very, very
Hey, Bob,
true.
did you have some slides you wanted to share?
Absolutely. I'm sorry, I didn't mean to drone on about other topics over here. But okay, so let's see.
No problem.
Where do
We've
I
got a
hit
couple
the?
questions in the chat.
Oh,
You should be
okay.
able to go share and then share your screen or your desktop, or on the
top.
quick
screen?
start tab. Either
Got
one.
it.
Yep.
Okay.
There you go.
Okay, it's coming up.
Can you guys see my slides now?
It's loading.
It's loading.
1 second.
Okay.
Taking a little longer than normal.
Yeah, my screen just went dark here for a minute. So I guess it's trying to load up over here.
I did that earlier too.
Did everybody have a good day trading today?
Oh yeah, I did. It was fine.
Good. Did you trade it? Did you trade it down and then right back up again?
No, I'm in some longer term trades. I just watched it. I didn't do anything.
Tom and I tend to do more monthly trades on the indexes. So I took advantage of when the market sold off a little bit and volatility popped. I got my next month's position on, or at least part of it.
But volatility pop was only
exactly.
What was it? I mean, it was about 9% today, but I mean, still it was the low on the VIX was 1297, and I just recognized the VIX from the. So everybody should be able to see my
we
slides
can see
now.
it. Yeah, the slide's rather small. I don't know if you want to hit present. There you go.
There we go.
Perfect.
I was going to say that with volatility so low right now, market volatility that is, it makes your job very, very difficult. I mean, I think we had today, didn't we had some big ranges on Friday, obviously after right? We had a big range, somewhat of a big range today, 20, almost 17 handles today. And then earlier in the week, right? So, I mean, it makes your guys' job extremely tough. You're squeezing out. You're basically trying to squeeze out blood out of a turnip. Is that right?
Well, no, not really. Like what Tom ended up mentioning, we're not trading on a daily basis. We're putting on a trade and trying to take advantage of the Greeks over a, let's say a 50 to 75 day period.
Okay.
So there's really, on days like today, if you're not putting on a new trade or making an adjustment because you're taking advantage of that tiny little volatility pop relative to what we've seen, I mean, right now, there's really nothing for us to end up doing. A lot different, though, when you're trading individual stocks. So why do we get into your presentation? That's what people came to listen to.
Got it. Okay, here we go. Well, folks, this is a presentation. We're going to talk about what's called the art of selling. And I wrote an ebook about this a couple of years ago, and it expands a little bit more on what we're talking about today. So after we're done with the presentation, if I've A, totally confused you, or B, you feel like you need to learn more about it, please send me an email at bob@explosiveoptions.net, and I'd be more than happy to share the book with you. It's free, won't cost you anything. So, and I've written a couple of other books as well too. But I found that over my years of market analysis and trading and running across many people over my years, is that a lot of them have a difficult time understanding and learning how to sell. Okay, and it should just be the most fundamental part of your trading, of your activity, of your action in trading. But for some reason or another, everybody seems to have a hard time doing it. I have a lot of people who come to me, literally, and they email me or they ping me, they call me, whatever, they get a hold of me and say, hey Bob, I got into the trade at 2. It's at 3 now. I really don't know what to do. We're talking about options here, okay? And frankly, I'm left scratching my head, wondering, what is it that is going through people's heads? Is it too much greed, or is it just ignorance, or and I'm respectful here because I'm sure there's a lot of people who get into this business, get into this game, and they don't know. They get into it without a plan, without knowing what to do prior to putting a trade on. And that's sort of where I come in. And if anybody ever comes in to ask me that question, says, "What do I do?" I know what they're asking for. I know what they want to do. They want to sell. They want to get rid of a position. They want to cut it, but they don't want to take responsibility for it. Well, look, if you get into a position at 2 and you're out and you can get out at 3, so you're talking at about a 50% gain. I'll take that responsibility for telling you what to do if that's what you want to have happen every day of the week and twice on Sunday, because we all know how difficult trading is. Trading can be, all right? It's a tough business out there. Every single one of us has a tough time doing it, all right? It's not easy for anyone. Please don't get me, please don't get me started when it comes to that thing. It's not easy, all right? Everybody knows what I'm talking about here. So let's get into the presentation. I'll talk a little bit about myself first. I'm as Tom mentioned, I'm the founder and chief option strategist over explosiveoptions.net. I was introduced to your group here by Steve Bakuti. Boy, I hope I didn't mispronounce Steve's name. Forgive me, Steve, if I did. Steve and I go back along several years as friends. We've worked together as trading compatriots, and he asked me to come and present for you today. I managed a hedge fund after my stint over at Sunkist Growers. Everybody knows Sunkist, the lemons, oranges. I managed their $200 million pension fund, which turned into a $300 million pension fund after I was done with it by the end of 1999 in a 401k plan. Some of you may know I'm a contributor to Real Money, TheStreet.com, and Jim Cramer features my charts and technicals on just about every month for the past 3.5 years. We did some charts last Tuesday on some retail names. Some of you may have seen that. I co-manage a trifecta stocks with Christopher Saatchi and for TheStreet.com, and I run a daily chat room. So I'm a busy guy, a lot of things going on. And if you were going to nail me on something as my expertise and say, Bob, what really is it that you do, that you think you do the best at, that you really love the most? And I would say it's the technical analysis and also the psychology of trading. So my friend Mark Chaikin and I everybody's heard of Mark Chaikin probably, Chaikin Analytics and Chaikin Oscillator and Money Flow. We are both teachers, and we both share the same passion for teaching. And I put this little slide up here just to tell you this is how I feel about teaching and about sharing what I have. And I'm 49 years old. I'm going to be 50 in January, and I've seen a lot, learned a lot, met a lot of people, and done a lot of things, made a lot of money, lost a lot of money. And I think it's my job as a teacher to try and share what's worked for me and what hasn't worked for me to help you become better, possibly to sidestep some of the potholes that I've stepped in over the years to save you guys a little bit of money. Because believe me, I've lost far more money than all of you guys combined. I've probably made a lot more money than all of you guys combined. I'm not bragging or anything like that, but because I've been in the business for a long time and I've done a lot of things and traded a lot and had a lot of success, and I've had a lot of failures. So we all do. And I see Bill Burton here. Bill, I know Bill is in the, Bill's been following me for a long, long time, so he knows what I'm talking about. So here's some of the things that we're going to cover today. And again, I've about 20, 25 slides here. I hope I don't extend too long here, but we're going to talk about the long lost art of selling, as we talked about earlier. Some people have a lot of trouble doing it. Hopefully by the end of the presentation here today, you guys will all be able to say to yourself, I can do it. I can sell. I don't need anybody to tell me what to do. I can do it on my own because I'm an individual. Playing your game and not someone else's game. We're going to talk about position sizing and why that's important. Some of the trades that I've done this year, just I want to share along with you, and why we traded those and why we sold them when we did. A few testimonials, and I do some coaching and mentoring. We may or may not talk about that a little bit later. So let me ask you guys all this question: do you think this is true? I apologize for the blurriness of this one. I think in investment, Tom Basso said, I think investment psychology is by far a more important element followed by risk control, with the least important consideration being the question of where you buy and sell. Do a lot of you guys believe this is true or not? Yes or no? Most of you guys say, some of you guys say yes. Most of you guys say yes, actually. I have a hard time saying that that's completely 100%. I think part of it's true and part of it's not. But it's always something to consider. So the art of selling. You all have one job to do, period. It's to make profits, right? Some of us like trading because of the game, because of being in the game. It's fun, right, to do it. But do you think LeBron James, who's probably the greatest basketball player in the NBA today, is in it just for the game? Or is he in it to win trophies? He wants to win, period. That is what you all have to do. You have but one job to do, and that is just to make money. But we oftentimes find ourselves in a position where we can't make money, or the situation is not ripe for us to make money. And then we have to step back and realize that, you know what, it's not time, it's not the right trade, it's not the right strike if we're trading options, that we have to cut bait. And why do we have to cut bait? Because we want to be ready for that next trade, which can net us that big, huge fish. That's a big one. That's not me, by the way, but that's a pretty darn good-looking fish, isn't it? Wouldn't you like to get rid of this guy and exchange him for that guy? Absolutely, right? So once again, we're in the game to do what? To book profits, to grow our accounts, to size better, to size our accounts much bigger, so we can maybe even take bigger size trades down the road. Everything is all about what's happening now and tomorrow. We can't control what's happening tomorrow, but we can certainly control what we do today. Period. End of story. Taking profits. But as I said earlier, there are many people out there who cannot take a profit for some reason. They get cold feet. Their fingers are stuck. They can't hit that. They can't find that sell button. They look like this. They're so very afraid to hit that sell button. And so here are some of the reasons why so many are afraid to sell. And I think I'll bet many of you guys can identify with some of these. You know, you tend to want to hide from a mistake. You make a mistake, you don't want to admit it. I make mistakes all the time. I don't make mistakes. I have trades that don't work in my favor a lot. If I'm making a mistake, the mistake is because I broke some rule that I shouldn't have done. And then it's shame on me. It's my own fault, and I have to deal with those consequences. But if I'm in a trade that I understand the risk and it just doesn't happen to go in my favor, in my way, well, so be it. I've got to move on and go on to the next trade. Okay? Maybe the profits aren't big enough. Maybe your expectations are way out of whack. Maybe you want to say to yourself, you know what? I'm going to make 50% on that trade, and I'm not going to sell it until I hit that 50% marker. How many of you guys ever been there? Raise your hand. You know, you can make 25% on a trade if that's all the market is going to give you, and if you're satisfied with that, okay, you hit 25%. You do that 5 times in a row. You don't think 25% is a lot, but you do that 5 times in a row. You know, cumulatively, that's over 125% return, right? 5 times 25. So what's wrong with that? You could take $2,000-$3,000 on a trade and double that, $4,000 to $6,000, and now you're going somewhere. Okay. Maybe you feel like you won't pick another winner for a while. I've been there. You know, I've been in horrible slumps that are so bad that it'll bring tears to your eyes. Okay, it happens. We've all been there. But you got to keep going. You got to keep plugging away. And even I was in a slump more recently. Okay, how did I snap out of it? I took a couple of small winners off the table. I built my confidence right back up again. Some of you think that, oh, well, you know what? This is my lottery ticket. This is where I'm going to hit that home run. I'm going to make up for all of those losses from previous months and years on this one trade. Boom. Raise your hand. How many of you guys been there before? I'll bet many of you guys in the room have been there before. That's not the way it works, folks. We're not here to win the lottery. I mean, there's 30, 40 people in the room here. I suspect that not one of you have ever hit the lottery for money, millions of dollars. And if you did, you probably shouldn't be here right now. You should probably be sitting on an island sipping a drink, right?
That was going to be my question.
And listen, I mean, there's no problem with playing lottery tickets, okay? I threw a couple of lottery tickets out there today because I like the charts of a particular couple of trades. There were some good relative strength today. I don't mind sharing them with you. I bought some, I consider them lottery tickets, but I bought some Alibaba 97 calls today, earlier in the day, at about, what did I pay, about 80 cents for them or something like that. I can't remember exactly what I paid for them. But anyway, so, they expire on Friday. Stock's up to 1990. Oh, I'm sorry, I paid 55 cents for them earlier today. So when the market was way down, I bought a bunch of these that expire on Friday the 2nd. They got an upgrade today. Stock had a good relative strength all day long today. I also bought some Apple calls earlier today. The stock had some really good relative strength. Look, I'm not married to these guys. I'm not married to them either. I just, listen, I'm married to one person. As all, you should never be married to any particular name. So, I'm not looking to hit a massive home run on these trades, right? I'm just looking to make a few bucks here and there, and ride out the momentum. Now, if the market takes off after the jobs report on Friday, then I know that these stocks that have exhibited good relative strength today and possibly tomorrow will also take off. So, I'm figuring my risk is this, is that if I'm in there at these 97 calls that expire on Friday at about 55 cents, and if the market is strong on Thursday and Friday, or Thursday, especially Friday, and they take the stock up to 98.5, 99, I got a home run on my hands, right? But I know what my risk is. My risk is 55 cents, right? Okay. All right. Let's move on. All right. So how do we book profits? And forgive me for being very simplistic over here, okay? But it's an important point. Do you all know where the sell button is on your keyboard or your laptop, your tablet, phone? Everybody know where to find it? Raise your hand.
That's my problem. Mine says J there. I didn't know that was the sell button.
Right in between the H and the K.
Yeah.
Yeah. But, everybody needs to know where that sell button is located at. And everybody needs to know how to use it and just go, understand that, what, it's okay for me to sell and take some money off the table. I always tell people that selling is the most refreshing, it's the most revitalizing activity you will ever do. We all need to learn how to do it. And again, I apologize if I'm making this seem very simplistic, but frankly, selling is a very simple task. In your mind, it seems like a big thing, but I'm telling you, it's a very basic and simple thing. Because even taking small wins or small losses off the board will free up your mind. I have actually, you guys are going to laugh at this one. I've actually called the broker and paid the broker to take a loss out of my account. Okay? Because I don't want to look at it anymore, right? I mean, I don't want to look at the ugliness any longer. It's not that I made a mistake. It's just that I don't want to continue looking at a trade that went bad on me day after day after day. Especially, look, I mean, what are we, August 31st? I've got until September 16th until the monthly September options expire. If I'm in an option that is worth a penny or 2 pennies, I wake up in the morning. I'm all energized. I'm excited to get going with the day, and I look at my portfolio and I got to look at that piece of junk. No, thank you. I'll tell the broker I'll pay you whatever it takes. Get it off my screen. Get it off my account. I don't want to look at it anymore. And they're laughing at me, but you know what? It puts my mind in a better frame. It puts me in a better frame of mind here, okay? Remember, if we're not ready to exit at the appropriate time, then all can and will be lost. And what does that mean? That means that if you're not willing to say to yourself, you know what, that's enough for me, I'm done, I'll take that off the table. We have some people in our chat room. One gal, her name is Maria. She's like Miss Consistency. She doesn't wait for me to say I'm selling. She doesn't wait for anybody else to say they're selling. They take stuff off the. She takes stuff off the board when she's ready to do it, and that's all. That's all of what you guys should be doing. So here's just a couple of quotes from some people who've talked about me and what we're doing in our chat room. I'll pass right through that. Anybody look like this guy once in a while? When a profit slips by you, right? One of the four fears of trading is to fear of turning a profit into a loss. You feel some frustration, some anger, and eventually it turns into some revenge, and you do something stupid by doing a revenge trade. You've been there, haven't you? Well, I mentioned earlier before we got started when I have some people asking me whether I should, I think Bill Burton knows about this one. He's probably laughing right now. He's in the room. That I said, if some people have to ask me whether they should take a profit or not, my response is always like this. If you have a 50% gain and you're asking me what you should do, then we're going to have a conversation between you, me, and my baseball bat. And I promise you, my baseball bat is going to win every single time. Okay? Now, it's a little facetious, obviously, because I can't actually see people. I'm physically can't go meet them and go hit them in the head with a baseball bat, and I would probably be taken out to jail as well too. But the point here being is this: if you have to ask, what do I do with a 50% gain? You need to have your head examined. Okay? The answer is always, what should I do? The answer is always, take it off the table. Period. End of story. And I promise you, you book your gains, you won't look like this guy. Selling, as you said earlier, is the most refreshing and most liberating experience you will ever have. But many struggle to do it. And why is that? Because of the word FOMO, another fear of trading. One of the four fears of trading, the fear of missing out. What is the fear of missing out? According to that Urban Dictionary, is the state or mental or emotional strain caused by the fear of missing out, a compulsive concern that one might miss an opportunity or satisfying event. Guys, been there before? Ever said to yourself, "Oh man, what if I'm up 35, 40%. Okay, that's a good gain. What should I sell it? But if I sell it, what if it goes up without me? Oh my God, what do I do? That's horrible. What if the stock keeps going? Okay, I can't sell because I'm going to miss out on that." Guys, ever been there? I'm sure you guys have. Well, you kick yourself for getting off that train? You look like this guy? Big mistake. I think your mind is out of whack if you think that way, because you have to be an individual. You have to be able to take responsibility and accountability for your own trades, and don't let the market dictate what you have to do. Book those gains. I mean, I promise you, nobody ever went broke taking a profit. Nobody ever went broke taking a profit. Remember that. Establish your rules, live by them, and don't wait for anyone ever to tell you when to sell. You should always be able to do that. And as Bob Jones said, no one will take as much care with your money as you will yourself. How about losses? We all know that losses are all part of the game. We just have to control our losses to a minimal amount of times and a minimal amount of losses. But some of us hang on to our losers far too long, right? And especially when you're playing options like I do, the clock is ticking, right? If you're trading stocks, you don't have the same worries. You have more luxuries than I do. You don't have the leverage of trading options that I do, and with higher returns with using smaller amounts of capital. But if you have those losses and you're staring them in the face, and you seem to lose control over what you're doing, which means that you got into the trade based on the technicals, and now you're holding on to it because you're praying to the porcelain god. Please, please, you're going into the bathroom every day. Please, 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 let this go up for me. I promise I'll never do it again. That's no way to trade, okay? You got to have some control over what you're doing, right? Crippling your portfolio, by the same token, also you're crippling your mind. We will have losses. They're part of the game. Just accept it. So what I think separates the eventual winners in trading from the losers. Now, we're not talking about losers meaning, trades. We're talking about losers in the whole big picture game of things, right? Can you say uncle on trade? Can you say to yourself, you know what? Look, that trade just didn't work for me. I'm out. I'm done. I'm moving on to the next one because that next one's probably going to be a winner. Or are you going to just sit there and stew over a loss day after day, week after week, and just stare at it and say to yourself, please, God, let this be the day that my stock goes up. Please let it be the one. Please let it be the day. I just want to get out even, or something like that. How many, raise your hand if you guys have been there? I think the best traders are the ones, read that line, that can cut your losers, go on to the next trade. And are you willing to accept it and just move on? Can you take your game and your mind to the next level? Because those who can accept losses are able to do this. Some people have asked me, Bob, excuse me while I hit a shot of water here. What's a good rule of thumb in terms of losses when it comes to options in stocks? Well, here's a good one for options. If you're conservative, I generally do my trading based on the charts and the technicals. Okay, so I'm looking at the charts. But for some other people, if they're in options, a more conservative way of looking at it says that if you're out 30%, cut bait, move on. A more aggressive way of looking at it would be, I'm down 50%. I'm going to cut bait. I'm in there at $5. It's down to $2.50. I'm really lost my opportunity to get gains on this thing. I'm done. I'm out. Stocks, 8% loss. And where did I come up with that 8% loss? Cut bait. William O'Neill, one of the greatest investors of our time who's ever lived, along with Warren Buffett. I would say William O'Neill is right up there with him. Says cut losses at 8% on stocks because it'll only take you 8.7% gain on the next trade to recover that whole entire loss. As it gets progressively larger, it gets much more difficult. A 33% loss on a stock requires you to gain 50% gain on the next one. A 50% loss requires you to make 100% on the next trade. Again, here's a few little comments from people who were in the room here. Now, we talked earlier about position sizing, and I'll tell you what, one of the things, this is the most important thing you can learn about options trading or futures trading or whatever. If you are not position sizing your trades correctly, within reason, you will lose your money. You will lose your account, I promise you. There's one thing I can promise you. If you're not paying attention to how you size your trades, you're going to lose, period. Okay? I've seen some of the best trading systems out there fail altogether because they didn't have the discipline to size their trades correctly. Don't let one trade kill your portfolio because I promise you, greed will wipe you out. So we had a trade earlier this year. This is April. We were on this Virgin Atlantic trade. This is just from our live from our live chat room. Some comments that I made. I'm Aztecs99. That's my nickname in the chat room. I bought some of these VA calls. I saw some flow coming in. I followed the options flow very, very carefully. Some people had made some comments later in the day about the perhaps a VA sale was going to come as early as Monday, so we come in early Monday morning. And Alaska Air came in and bought them for $57 a share in cash. So we bought those in the low fours and fours and fives, and we sold those at $18 to $20. We banked a nearly 400% gainer on this, but we took their profits. We took them off the table. Here was that chart of a Virgin Atlantic before and after where we sold. And there was some feedback we had some people in the room from the chat. We have a great chat room. We have a lot of fun in there. So if you're into options trading, this is where you gotta ask me a little bit more about this. We get you in the room. DreamWorks, same deal. A little bit later on in the month, we'd heard some chatter that DreamWorks was being put up for sale, but Comcast was even looking at them. This is some comments from the chat room on that particular day. I was adding the DWA May 31 calls and some 32 calls in June. And then literally 5 minutes before the close, Katzenberg says he's going to leave if a deal is done. And sure enough, there was like the snow morning. The deal was done at $40 for $40 in cash. So the next day deal was up. Our calls were up something like 300%. It was great. And some comments that were made in the room. We waited for nobody to tell us when to sell these. Robust gains or not. They had to be sold, period. That's it. More comments about what they were saying about us here. These guys hit some big winners with us. And so finally, how to take a loss. Look, you got to have rules, right, for when you're ready to jump out of a trade and say, I've had enough. Size your positions correctly. We talked about this a few moments ago. It's critical to size yourself correctly here. Do not add to a losing trade. I hate doing that. It just makes a good sized loser even bigger. Know when to walk away from it. And look, if you're struggling, if you need to practice, nothing wrong with trading on paper for a little bit before you get yourself back in the game. And remember, success in life isn't about how much money you make. For me, it's always about the difference you make in people's lives. So there's a deal for you if you guys want to get involved. As I told you earlier, send me your email if you wish to get the ebooks that I've written. I'd be more than happy to send those to you free of charge. They don't cost anything. I have a new book that's coming out that I've finished writing that we're going to get published pretty soon. And I'll send that. I'll send links over there to Tom and to Jim and to Steve, and that's it. So, any questions from anybody? I can't see the questions, guys, but more than happy. Thank you for attending, and remember, become addicted to constant and never-ending self-improvement.
Yeah, there is a chat. If you look up at the top, there's a thing that pops down. You should see the chat window. You should be able to select it.
Let me see if I can. I see the. There we go. Okay, so did I hit to chat?
Yeah, then you'll see the chat window pop up.
I see it. Okay, there we go. Okay. Any questions from anybody?
I don't really see. There's a lot of chatter back and forth, but I don't see a lot of questions. Let's see.
I'm always happy to answer them offline as well too. If anybody wants to send me an email, my email is I'll type it in there for everybody. bob@explosiveoptions.net. How did I do, guys? Was it okay?
Bob, I have a couple of questions. When you are looking, right, you're looking for movement in the underlyings, right?
Yes.
Okay. So basically, you're going to end up playing a directional trade. What are some of the trades that you end up doing? Do you end up just buying straight out options? Do you end up looking at vertical spreads? Do you have to use back ratios? What trades do you use, and how do you choose which trades you're going to use in what situation?
Well, it's not always a directional trade. There's three different types of option trades. There's trades for direction. There's trades for time, and there's trades for volatility. Right. So if you're trading for volatility, you don't care what direction it's going, right? You just want movement, right? So if you're trading for volatility, for instance, you may put a strangle on or put a straddle on if you're looking for a big move, right? So those are some things that I've done pretty successfully in the past. A strangle is buying a call and buying a put simultaneously. A straddle is buying an at-the-money call and put the same number, same strike simultaneously because you're looking for a big move. So no, I'm not always a directional player. And if I'm sometimes it's about playing time. Like today, what we did is I bought an at the money call on Salesforce.com CRM, and they had earnings out tonight. So and the options were pretty juiced up. So I bought an 80 call for September, but I sold the weekly 80 call today. So that was a calendar spread, right? So I mean, I'd like the stock to go over 80, but I really would like to go over 80 after Friday. It looks like it's getting drilled after hours here, right? So, but the 80 call that I sold today was I picked up. What did I pick up? About $3 for it, and I paid 360 for the 80 call for September. So I mean, total only cost me 60 cents, right?
Right.
So that
Right.
80 call is probably going to expire worthless on Friday. So now I get to keep that $3 credit, and now I'm sitting with an 80 call, which I've got 2 weeks to go before it expires. So, but I've only paid 60 cents for it. Everybody else paid 360 for it.
Right. Okay. So when you end up doing that, you're playing more long gamma than you would be in terms of the difference between the Vegas. Okay. So again, you're playing more a directional movement, or do you end up doing anything where you actually end up trying to sell, let's
Yeah.
say, iron condors or things like that, and take
Well,
advantage of time also, or?
some of the best returns that I've had in my client accounts were selling put premium. I like back in 2012 and 13 was a great year for selling puts, and I sold lots and lots of puts and bought them back cheap, or else let them expire worthless. So yeah, I'm a big believer in selling premium. I like selling premium. Now the only problem is that in my service, okay, and sometimes in the chat room, not everybody is eligible to sell premium, to sell put,
Right.
sell naked puts, or to sell put spreads. For my own sake, and for a couple of really bad, unfortunate examples of what happened to me, I don't sell naked puts or calls. I sell covered calls, or I sell covered spreads. But yeah, no, selling premium is a great way to go. I think, especially when you know that 80% of all options expire worthless at expiration. Why wouldn't you take those odds of winning 4 out of 5 times?
Yeah, no, it makes a lot of sense. The challenge always with that is making sure that you try to end up controlling your losers as much as you can.
That's right. That's correct. I do see Bill had a question. Is it primarily buy premium as opposed to selling it? I do both, Bill. I remember Bill's been in the room. He's been with us for a long time. So he's been with me for a while. He's been in the service with me for a long time. I'm sure he's probably happy that I remember him. Bill Burton. Peter says, won't IV come in on the long option in your CRM calendar spread? Absolutely. That's why I sold the call, or I sold the call that's expiring on Friday. So there's nothing wrong with that. If I'm short an option that's coming in that's going to expire sooner than the other one, then yes, I want that IV to come in. I want that IV to come down. There's nothing wrong with that.
It is truly a lottery ticket, because if it does end up moving higher, I know you said it sold off in after hours, but if it moves higher and it gets anywhere close to 80, it's just a bonanza for you, because the thing is, you have that, basically, it's not free, it's 60 cents. I realize that, but 60 cents, not $3.60. So Bill, one of the things he's done is he's taken the real, the sting of having the IV drop out of it, and it's much more a positional play for after options. It's a very smart play. It's a way to get very cheap options.
Yeah, and listen, I mean, you take advantage of IV when it climbs, and we know that implied volatility usually climbs when in front of an event, right? So the implied volatility for this particular thing was like it was like in the 60, or it was like
Right.
the
Now,
30% 30 percentile.
how do you evaluate how volatility's moved in those two separate strikes that you've the different options that you've chosen going into it? Did the back month not move up as high as it normally did, or did the weekly in front of it move up less? Do you do any historical looking back to see what's typical as you go into and come out of earnings?
Well, I know the last couple of earnings reports, the stock really took off. Usually, a lot of times these things, run in threes. Um, I guess the earnings were good on the stock. We won't really know. Obviously, the stock's down obviously now after hours here, but we won't really know what's
Oh, yeah.
happened until
No,
tomorrow. But
I wasn't interested in this particular case. I was interested more in the way you end up looking at it. Because when we end up looking at things, it's always two things. Definitely, it's how much something moves. That's absolutely the most critical. But also one of the things that we looked at in another company that I was in, we used to end up looking at what the IV levels were. And sometimes we would find that IV was cheap in its terms of its term structure, in like one expiration versus another. You use the weekly and then the monthly after that. Did one end up moving more than another, and that ended up giving you any type of an edge? Because 60 cents sounded cheap, so I thought you probably had an edge someplace. I just didn't know how you ended up defining it. Or is it just simply you look for a best price?
well, I look for a good price. I look for a good chart as well too, and I have to evaluate whether I want to take that risk. Of course, my risk is defined to that 60 cents, right? And
Yep.
if I had 20 contracts, it's my risk is what, $1,200. So I know where I know what I can lose. As far as the implied volatility, your question there is, yes, the implied volatility was really juiced up on the short-term options this week and next week. And in the next couple of weeks, it wasn't quite as substantial. So, was it a perfect trade? No. The perfect trade would be, okay, this expires on Friday, and then it really takes off and goes to 85 next in the next couple of weeks, and then it turns into a perfect trade. But we'll see how it goes.
Hey, Bob, what's the difference between the trading service and the chat room?
Okay, so I've had this trading service going since May of 2011, or cumulative returns, which I can share with anybody who wants to see it. We're up about 150% since the beginning of time. I called it Memorial Day 2011. And I send out trade ideas that I'm doing in my client accounts and my own account. That there's recommendations, suggestions of what we're doing. Normally long puts or long calls or some combination of both. And again, some people in the service are unable to sell premium, so I don't do that. But in the chat room, we have a group of very dedicated and very strong traders that we have in there during the day. They follow me. They follow a couple of other people in the room, and they all learn. They all come up with their own ideas. They share, and it's a really good, really fun environment that we have. So it's two separate different places. One thing that I've found, and again, I'm probably biased because this is my room, but I've found that it's a very addicting place. People have come in there and they can't leave. They can't, not like I've closed the door on them, trapped them in, but it's a very addicting place to be. So we share a lot of information, a lot of stuff.
Great. Well, we're right about an hour, which is normally where we like to wrap it up, and I'm sure everybody has things to do. So thanks so much for coming and sharing your presentation and your trading services, and we're glad you came.
It's my pleasure, and like I said, if anybody would like those ebooks, I'm more than happy to send this over to them. It take a couple minutes, and I wish everybody lots of luck, and wish all of you guys a nice long holiday weekend after the week is up, and hopefully we all make a lot of money coming into after the jobs report Friday.
You bet. Jim, any last words?
Just a very big thank you.
My pleasure. Thank you very much for inviting me, fellas, and I'd be more than happy to return again and talk about another topic as well too.
Fantastic. Thanks again, Bob, and everyone for sticking with us, and we'll end the meeting here. So thanks a lot.
Thanks, Tom. Thanks, Jim. Thank you, everybody.
Okay, bye.
All right, bye now.